Hey everybody, it's Monday, another bumpy day, but we're alive. And today I'm going to talk about Bitcoin, whether it's inflationary or deflationary. And and that works. I should pause. Sorry, just testing something. Rough day out there, but you know what? We're going to talk a bit about Bitcoin today. It's still hovering at that 47K level. But this should give you confidence that the only way is up when we dig in. So is Bitcoin inflationary or deflationary? There's a whole bunch of stats I'm going to show you guys, and it's going to be quite exciting to see. So first of all, math, money, freedom, you guys know the drill? And who cares? It's edutainment. So first of all, where are we right now? It has been a volatile year so far. We have had a 55% decrease in the summer and a 40% decrease so far. That's two biggies in the last 8 months. And normally, legacy market cycles only have two big dips in every single cycle. So they say, though, you do age quicker in crypto years. So stay safe, everybody out there. Don't get too stressed. This is the asymmetric bet of our lives. Just remember that. You know, if you can't stomach the volatility, Bitcoin will be there when you come back. Okay? So second thing I just want to touch on, the stablecoin supply ratio is bottoming. This is a very good sign. You'll see on the bottom, the 3 times it went into a little box, and it's doing it again. At this point, this is the time where basically we typically is followed by a lot of buying pressure. So hold on tight. It's all very good, but that's not why I'm talking about today. Tomorrow I'll do a lot of TA and chain analysis stuff and TA Tuesday. But today I just want to talk about where we are. Now, I always talk about money coming. So sovereign wealth funds are coming, and they're prepping for a world without oil. These are places like Kuwait, Dubai, Saudi Arabia. They have at least 2.4 trillion that I know of. And if they allocate what their advisors tell them to allocate, which is 5%, that could be worth $120 billion. So what does that mean for Bitcoin? Here, we look at it here. So 2.4 trillion fund, if they allocate 5%, it's $120 billion. And that multiplied by our Bitcoin multiplier, which is 25x, that would increase the market cap of Bitcoin by $3 trillion. And that, adding that to the 1 trillion we have today, would be a 4 trillion market cap. And the price per Bitcoin would be about $210,526. So apparently that's going to hit next year. So we'll watch and see. And that's just a piece of the money that's actually coming. So just stay patient, everybody. And I have this theory, as I mentioned, that people are keeping a lid on the price to make sure it's cheap enough for these guys to get in. And others, pension funds all over the world, high net worth individuals, you name it. Everybody's trying to buy. So don't be shaken out. Now, here I'm going to talk about, this is what really triggered this idea for this video this morning, is from Dylan Leclerc. He said, well, everybody's talking about the 19 million Bitcoin that have been minted. And the supply curve is flattening off very, very rapidly. You can see the yellow line on the chart here. But the key is, what triggered this is that the inflation rate of Bitcoin is 1.88% versus about 15% for a fiat currency. But the question is the Bitcoin inflation rate really 1.88%? That's what we're going to dig into today, and these findings will be very surprising for you all. So first of all, let's talk deflation. This is a cool illustration of the deflationary power of Bitcoin. This is the number of Bitcoins it took to buy a home in 2012. It's about 51,000 Bitcoin. 2013, 19,000 Bitcoin. 2014, 351. 2015, 901. It was obviously a bad year. 2016, about 680, etc., etc. Today, it costs about 8 Bitcoin to buy the average home. Now, if you look at these two charts, the first one is an actual chart, so you can't even see the small amounts of Bitcoin. The second one is a log chart to give it a little more meaning, but still impossible to see. This is a simple example, everybody, of what deflation is. It's sometimes people get confused between inflation and deflation. It's hard to wrap their heads around actual deflation. That's the way you think of it. Basically, the increase of purchasing power in the asset you have. Bitcoin always has increasing purchasing power. But let's jump ahead and talk about where we are with the 19 million Bitcoin. This is a little chart I put together. We are at that 19 million marker, just shy of it. So there are, well, the point is 19 million Bitcoin were mined in 4,714 days. We have 2 million Bitcoin left to mine, and that's going to take 42,269 days approximately. So if you assume it was a flat line, that'd be 46 Bitcoin would be mined per day. But it's not the way it works, unfortunately. And we'll talk a bit more about that in a minute. But here, this is going to go out until the year 2140. And the first 90% took 12 years. The next 10% takes 118 years, 119 years, something like that. So we're going to watch that carefully. Now, what does this mean? The 90% of the 21 million have a mined, 10% left, 119 years. Yes, I was right. And Bitcoin is only going to go up from here because of that ratio. So watch that very carefully. Next thing to look at is future supply, how this actually tails off. So December 14th, 2021 is when we hit 90% of supply. That's tomorrow. 95% of supply will be March 31st, 2026. I would have done this tomorrow only. It's TA Tuesday, and I would have missed the 90% actual amount. 99% supply will be mined by March 17th, 2035. So 14 years away from now. Now, 99.9% supply will be in March 17th, 2048. Remember that year 2048, because we're going to talk about that a lot more. And 100%, 2140. So remember, it's going to take a truckload of time, nearly 90 years, just to do 0.1% of supply. So this thing will tap out pretty fast as we go forward. Remember, this is staggering. The last Bitcoin will take 40 years to mine. Think about that. Talk about a flat curve. And there's a ton being mined every day now. So let's look at the Bitcoin Supply Allocation Refresher. This is something I've covered a few times, but it's a slightly different version here now, with some updated data. So coins lost to date. This has been verified by a number of different sources, 3.7 million. Satoshi lockup, 1.04. Just to remind everybody, Craig Wright is not Satoshi, despite what you may hear in the papers. Mirsu Popescu, 125,000 Bitcoin. Additional lost coins, 198,000. Total lost, 5.063 million coins. That's a big chunk. Mined to date, right now, as of the moment of this presentation, is 18,909,000 Bitcoin. And the coins truly available are that 18.9 million minus the 5.063 million, which is about 13.8 million Bitcoins. So everybody, when you hear people talking about 21 million Bitcoins, it's not. It's always going to kind of be under 14 million. And I'm going to go a little bit deeper and explain as to what else happens. So, according to Cane Island Digital Research, CIDR, they say that 4% of circulating Bitcoins are lost every year. That's a staggering amount, 4%. But let's dig into that 4% and see exactly what it means. So here, first of all, if you are self-custodying your coins, remember, 4% are lost every year. You don't want to be in that 4%. And a quick reminder as to how they are lost. Your hard drive fails. Your wallet fails. People forget or lose their seed phrase or private key. People send crypto to the wrong address, etc., etc. I've seen all of this happen. My sample size is very small, and I've come across hundreds of people that have lost their coins. So be very careful out there. It's not like in the old world, you can just store your money at a bank or hide your cash under a mattress. With Bitcoin, it requires a lot more sophistication, so be very careful. Don't be in that 4%, everybody. Now let's look at what 4% drain on Bitcoin supply would mean going out to the year 2148. Here, it's kind of staggering. Assuming 4% of people do lose their Bitcoin every year, or 4% of Bitcoin is lost, self-custody will drain over 7 million Bitcoin from the supply, leaving only 6.836 million Bitcoin available in the year 2048. This is an extreme example. I don't know if that number is going to hold up over time. I do believe people get more sophisticated as Bitcoin becomes more valuable and maybe custody it somewhere. But what I did, though, is took a 1%, which is very, very conservative, which I believe will hold true. And this is the numbers that shake out of that. So assuming 1% of Bitcoin is lost per year, self-custody will drain 1.7 million Bitcoin from the supply, leaving 12.4 million Bitcoin available by the year 2048. I didn't go beyond that because it'll be a very different world by then. Hopefully we're still around. But Bitcoin per person in the year 2048 will be about 0.00124 Bitcoin, or 124,000 sats, which is worth about $58. That's kind of more of a specific supply that we'll actually have. Now remember, there's another factor here. This is a cool little slide regarding Bitcoin treasuries. Bitcoin treasuries. Bitcoin are being sucked up by institutions and treasuries big time. Here you see 1.5 million owned by treasuries so far. We know some of the names like MicroStrategy, Tesla, Galaxy Digital, Voyager, Square, etc. But also countries like Bulgaria. They confiscated Bitcoin from gangsters, over 213,000. Ukraine have nearly 50,000 Bitcoin. Finland, El Salvador, Georgia. Everybody's in on the game. And you got private companies like Block One with over 140,000 Bitcoin as well. This is over 10% of supply, which is substantial. So if you are a retail investor, you're competing against these folks here. So if we look at those amounts held by treasuries, it's about 11.8%, assuming my max supply of 13.8 million. Treasuries have 1.5 million, so that's nearly 11% gone. So another way to think about it. Now, the other scary item is typically the market used to get a lot of supply from Bitcoin miners, but that's stopped. Bitcoin miners aren't selling. They're borrowing fiat to pay their electricity bills and buy new rigs. They're not selling their precious Bitcoin at all. This is a quick tweet from Hut 8 Mining today. 90% of all Bitcoins have been mined as of Monday morning, according to data from Blockchain Tracker. And they say they are now hodling 5,242 of their own Bitcoin. And again, the management team promised they wouldn't sell. So what does this all mean in terms of supply, and is it deflationary? So let's look at my chart. Now, assuming that very conservative 1% per annum loss, this is what the actual supply chart will look like over time. Yes, it will rise a little bit up until the year 2025, but I'm already factoring in all the lost coins are taken out. If you assume they're not and they're gradually lost over time, that chart would look very differently. But this is the actual supply that exists, going all the way down to about 12 million in the year 2048. So remember, when people talk about 21 million coins, it's not. It's about 2/3 of that as we go forward. So, in the philosophy of Satoshi Nakamoto, lost coins only make everyone else's coins worth slightly more. Think of it as a donation to everybody. So the question is, do you want to donate your coins to others? Answer in the comment below. Second thing, conclusion. Bitcoin is absolutely deflationary. It's deflationary in 3 ways. 1, the shrinking supply is deflationary because people are losing their coins. Second of all, the new supply is not hitting the market. The miners are hodling their coins. And third, the most important thing, is your Bitcoin purchasing power increases every day as fiat goes to zero. It's deflationary 3 ways, which is huge. So remember, hodl on, stack as you can, and it is absolutely the scarcest, hardest asset on earth. So I hope you like the content. Hit the like if you do, and I'll see you all tomorrow for TA Tuesday. Big thank you to the mods out there and keeping us all safe. Thanks, everybody.